Hey everyone, welcome to Thursday's edition of my weekly update. That's right, it's not Wednesday, it's Thursday, and I thought that it really made sense to just spend a quick couple minutes to kind of talk about what exactly is happening with GameStop and some of these other companies that are seeing significant increases in value seemingly overnight. Really just want to talk to you about kind of what's going on, what goes on behind the scenes with this, and to make sure that investors at least understand kind of what the inherent significant risks are when you make a move like this as an investor. I do want to say that today is not meant to be specific advice about whether or not you should be pursuing any of these areas. Again, just to make sure that you really understand kind of what's happening, what risks are there, and then so that you can hopefully make a decision. I've gotten a ton of emails, phone calls, Facebook messages, Facebook posts kind of talking about, hey, what's going on with GameStop? Should I buy GameStop? Can you buy GameStop for me? All of these things. And so really interesting. I have to tell you, I started kind of hearing about this late last week, and I definitely remember thinking, that's never going to work. And then I woke up yesterday and I said, holy moly, it is working for the short term. It was kind of shocking. And so if you remember kind of GameStop's model, it's a little bit of a dinosaur now. So GameStop has really kind of seen decrease in value over the years, especially as we've been able to see so many electronics and video games be able to be purchased digitally. So there's not a whole big need to kind of go in anymore, trade games to get new games and different devices because so much can be done just right over the internet. So GameStop will likely be the next blockbuster. Unless they can find a way to really create some new innovation, which they have not been able to do, certainly over for the past few years. It's really just kind of been a dead man walking for some time. So there was a little bit of chatter last week about the fact that there was some new leadership that came on, and there was a little bit of buzz of activity about like, hey, maybe this will be a good thing. And then what happened was there were a bunch of just different chats and groups on social media. Reddit is a big one that was kind of the catalyst for this. I actually follow a couple of trading groups on social media where I really just sit back because I like to kind of see where investors are, what they're thinking, what things that are, what's making them kind of drive their decisions. And so I laughed. So these are just some of the memes that I saw this morning when I woke up. So as you know, at one point today, AMC was down like 68%, which is another one of these companies that has seen a huge rise in stock prices over the past couple days due to this kind of manipulations that's happening, as well as GameStop. And so everybody keeps saying, should we be selling? And then the rest say, no, we're going to hold the line. We're going to hold for glory. Don't sell. So this kind of cracks me up every time I see it. Another one, to the moon, but then somebody added this, but maybe it's the moon down here, because as these companies have just literally rocketed over the past few trading days. And when I say rocketed, I mean being up 100%, 150%. GameStop was trading over $400 yesterday. Well, it has been $30 forever, which I'll show you that in a little bit. We're not wanting to move today. That's okay. So really though, so the idea is, so what's going on? And so that's kind of what I want to break down today. So these companies, these kind of like zombie companies that have not had a lot of innovation, have had a lot of movement, what happens is that hedge funds and large investment firms may decide they want to short that fund. And so if you decide to short a fund, you are betting that that value is going to go down over a certain price period. So if I'm a hedge fund investor, or I'm an investor with a lot of money in the market, and I'm betting that Fund A right now is trading at $30 a share, and I'm betting that over a period of time that I'm choosing, by that time that fund will be trading at $1. And the idea is that when that contract expires, I get the difference between the 30 and the dollar is mine on every share. So you're taking bets that the value of that stock is going to go down over time. That's shorting it. Now you're kind of like selling it prematurely. So you're selling shares of stock that you don't actually own. Now what happens if that price actually rises unexpectedly? I have to now go back and buy back those shares to cover my short position. So I got to go back in, and now I'm buying at a higher price than what I had originally bought for, and I don't have a choice because I'm short these stocks. So on Reddit, what happened was, as GameStop had a little bit of a pop just due to some news, and it was almost like this gang of investors said, okay, well, what happens if we all go in, we go long on this fund, we start buying this fund, it's going to prop this fund up. All of those hedge fund managers, those short, anybody who's invested short on it, they're going to have to scurry to buy up additional shares to cover their short positions. And that's really what's been happening. So people are buying AMC, GameStop, Bed Bath & Beyond, these companies that really have gone nowhere in years, and all of these short investors are now scrambling because they have to cover. And a lot of these funds, they're in it for significant amounts of money. I mean, there are pension funds. I read today, in this week alone, like over $24 billion was lost today. And so, I mean, part of me says, hey, kudos to you retail investors, because you, for the first time ever, have really been able to kind of like give it back to the hedge fund managers who forever have really been manipulating the market in their own ways. And that's really all this is. This is just kind of like a legal form of stock market manipulation is what's going on here. And so here's the problem, though. And my screen is stuck. So what I just want to show you, though, here's the problem. So real quick, so here's GameStop. So, I mean, this is since April. I mean, you go back 5 years. I mean, literally, this fund has done nothing until like 4 days ago. So here's where we are. So we're down 30% for the day so it's trading up. I think right now it is up, trading at 241. That's what it's saying right now. So so you can kind of see, though, literally it's done nothing, as it should, because it had really no reason for its value to increase. So the only reason why GameStop's value right now is increased is because investors have put an inherent value on this stock, believing that for now, to be able to drive up this price, and then they'll be able to sell it at a higher price than what they bought it for, because they're also assuming that all of these hedge funds are going to have to come in to take care of their short costs. So remember, a couple weeks ago, though, what do we remember about what drives the market? It's all supply and demand. It's all buyers and sellers. Here's the problem. When there's no more sellers for this, no more buyers, when nobody else wants to buy GameStop, we are going to see a rapid decrease in this fund's value, in the stock value, because suddenly there's going to be, at some point, there's going to be a tipping point. Someone's going to yell fire in the theater, and everybody's going to go running for the exits. And the problem is that there's only going to be so many exits. And at some point, people are going to get stuck, because not only you're going to have to find a buyer for your stock that you're holding on to. So have people made a lot of money in the last couple of days? They absolutely have. And for people who got in early and did it, they absolutely have, probably, depending on how much they put in, they've made significant money. But the tricky part now is, when do you sell? When do you hold on? So there are options expiring tomorrow, so it'll be interesting to see kind of what happens in the next day or so with that. But that's really the risk at this point, is that it's all good if there's enough buyers still kind of able to go in to kind of artificially inflate the value. I don't think there's one person in the world who believes that GameStop's value per share should be over $200. Nobody believes that. What they believe is that for the short term, this is called a short squeeze. So they're squeezing it up, and by doing that, they're forcing those who've taken a short position to kind of chase after that to cover. So, I mean, it's genius, but it's also super risky, because, like I said, at some point, it's going to switch, and all it's going to take is for kind of one person to say, I'm out, and then the cascade is going to start, and likely that person's not going to say, I'm out, until they've already exited. And so that's where we are. So what's the timing? How long should you hold? I have no idea. I guess it depends on when you got in, how much risk you're willing to take on. Just know that this is very, very risky right now. And this is a very short term. This is certainly a day trade stock play. Options are very confusing, even to more savvy financial investors. They can get you into trouble if you don't know what you're doing when you talk about I've heard people say that they're trading on margin and they're leveraged, like they're trading with money that they don't even have. I mean, those types of things are very, very dangerous. It's interesting too, though, because we've talked about the fact that before that investors were in this like euphoric, like the market can only go up. We're all going to get rich off the market. The market's never going to hurt us. This is the best thing ever. Who needs to go to Las Vegas? I can just put all my money in on the market. I mean, that's where we're at right now. And so, we saw these euphoric times in the 90s. We saw them back in the early 2000s. And again, they never end well. This will never end well. Let me just show you in case you were wondering, well, maybe AMC will be a better investment thought. In this. Okay. My computer must be caught. All right, so here's AMC. So let's look back at our 1-year numbers for AMC. And so certainly since the pandemic, we've really done a whole lot of nothing up until a couple days ago. This is down 54% for the day. Something else I didn't point out if you look at. So for the Y charge rating, avoid, fundamentals weak, valuation. This is actually a better score than GameStop. GameStop basically just says don't, in Y charts, just don't do it. So very much so the same thing here. This is a short-term play. Some people will absolutely make out very, very well, but for the vast majority of investors, this is going to end poorly for them. And that's just the way that it is. Again, pension funds right now, hedge funds, they're having a really, really bad week this week. I mean, billions of dollars. So again, the fact that for the first time ever, really, retail investors have been able to kind of tell the big guys that, like, hey, we have a part of this too. Interesting too, some ramifications that might not have necessarily been expected. We saw the market broadly across the board kind of sell off yesterday. Lots of downward price pressure. And originally, I was just thinking we were kind of due for a correction. So many of these areas have been just so completely overextended, especially like small caps, mid caps, international. But then as I was kind of doing some reading and research and come to find out, and it really makes sense. So these hedge funds who now had all of these short calls that they had to scramble to cover, well, how do they raise the cash to do that? Well, they had to sell large caps across the board. And so by doing that, other hedge funds and maybe where their competitors actually went in by them selling large assets of large cap growth, that's putting the pressure on their competitors now because they have to sell at those lower prices. So it's fascinating. There's lots of things that go on within the market. So this, I kind of can, like this right now, it's almost like it's like a legal pyramid scheme within the market. I mean, it's working. You can see that, it's like this herd mentality. It's like us against them now. And so there's a lot of euphoria amongst individual retail traders. And my word of warning, though, is number one, that if you don't really know what you're doing, then options trading are very, very risky. And number two, just realize that this won't last. This can't last forever. This is really kind of a short-term play. But that was just kind of what I wanted to talk to you about today. Again, I've gotten so many questions. I'd love to hear from you. So if you are an investor who on your own went out and you purchased AMC or Bed Bath & Beyond or GameStop, I'd love to hear how you made out with that, if you're still holding it, what you're thinking. Interesting also, so many of these platforms, TD Ameritrade, Robinhood, Webull, Schwab, have suspended these funds from actually being able to be bought on their platform right now. And so there's a whole lot of anger about that across the board. But I think that what investors don't realize is that I think for a lot of these firms, they're covering themselves because they realize so much inherent risk is involved with this that investors might not realize. So, there's a lot of theories out there that they're bowing to the hedge funds. But I wonder if this is also, they're recognizing that this is just not going to end well and for investors. So thanks for joining. I'd love to hear your feedback, and we will see you next week.